So this is just a recap for live stream 19, and it is recap for let's just have a look what day we're on. I think we're on day 23 or something, but can't quite remember. Today we just had a continuation of what we've seen over the past couple of days. We've been on the edge, accounts in a difficult position. We were a little frustrated today, came about 10 points from losing the accounts, and it was a frustration revenge long hold which actually got us out. So I'm not going to pretend it has been a great trading tool, because it has not. It has been, there were some frustrations that came into play. One of the key periods was me trying to buy the dip outside of my system. I didn't use revolver, I didn't use 3CS. I decided to just buy just based off bullish candles. Let's see, not sure what's happened there. That was a previous high we had marked on. So let's just go back in time here. So as we can see, market opened up. Let's see, did we have any 8:30 news? Didn't seem to have any news of significance. Market opened up from a tight consolidation on the ribbon, the moving average ribbon here. Had a strong move up, pulled back, held within the ribbon, consolidated to the downside, didn't close below, headed higher. Also had some major news coming out, PMI. We've had some PMI, Chicago consumer sentiment, so on. Had some very important news, high impact news. Not necessarily like CPI level, but we had Michigan consumer sentiment, inflation expectations, and ISM manufacturing, construction PMIs, construction spending, ISM manufacturing, new orders, PMIs, all that. So all that came out about 10 a.m. Eastern Standard Time. Had the pull back into the ribbon there off the news, but we still headed higher. Marked out this box just off these after noticing we came down, pull back, headed lower. Saw price come in, sell out of the box there, but it was immediately held up by the ribbon, didn't close outside, headed higher. So came into the box, saw this what appeared to be a false breakout, this big wick, closed bearish. As prices came, I should have been more aware here. We saw higher lows, but I decided to go short, just based off this here. As prices headed higher, I decided to get out for a loss. Got in for a move up towards a dart level very late on, bit of a chase, got that level, then eventually went long, I thought, as prices pulled back here, closed bullish somewhat. I thought we could see brief move down before a move to take out the high, so I went long. Prices kept selling, so I got out and got out of there. I think I went short here, got stopped out. So despite the market being in a strong bullish trend, I kept trying to be a bit too smart, a bit too cool for school. Made a couple of trades through this area here, and all I pretty much was doing was churning a bit. I believe this was longs. Had this big sell move into the European close. Again, it caused me some issues there. Had prices not sure why here, but had price up an eye, got in, got out. Oh, this is where it happened. So through this period here, going into lunchtime, going to about 12 Eastern Standard Time, had prices come up, So I saw these highs, pulled back, saw these highs again, looks like we're pulling back. I believe we're at a dart level or something around here. But whatever the case was, I decided that despite the market being as strong as it is, I would continue with the move to the upside after being frustrated after drawdown. So I went long I went long off the 20 period here. Initially I went long off this move down towards this moving average. Market moved very strongly bearish to the downside, got out for a loss off this bullish candle, thought we'd see the continuation to break the highs. No strategy there, got in, got stopped out. This candle, same again, thought we'd see the move upwards to the continuation highs, got in again, and as we had the second candle close bearish, we got out there. I went long on this candle again, so got out of this bullish move, got closed that one for a loss, got in early before the close of the candle, put a stop at the lows, expected continuation, market sold off, got out for a loss. Then I saw a revolver short signal. Now we're inside a moving average ribbon and the context is important. This was at about 12, this is about lunchtime, so the context is important. So lunchtime about there. If you look at the context of the market, it's like, come on buddy, like what are you doing? So you know what, I can't even bother to do that. So let's just arrow line. As we can see here, that's what we saw off the market. So we came into lunch into this consolidation, and here I am shorting a market which has moved up, nothing but moved up all morning, but there I was shorting it, and that was off the revolver, and that was pretty much because of all these dips I bought, not based on the system, not working out. We didn't even get back above the moving average ribbon to even suggest that the market could continue the move to the upside. Instead I was just buying just based off bullish candles. So out of frustration, seeing the revolver signal, went short, as you could imagine. As soon as I went short, bullish candle again. You could hear my frustration in the stream, bullish candle again, and eventually I believe here I closed for a loss or was stopped out just there, and that was based on the revolver signal in the opposite direction. Now with the context of the trend being to the upside, holding the moving average ribbon, I should definitely have been looking for a move to the upside, but I hesitated, didn't want to do it. The level I was originally looking for was at 51.50, which was a dart level. Then eventually we saw this big bullish candle come in, close at that level, and out of my sheer frustration, the account was pretty much 10 points away from the auto liquidation. So let's bring over our trade performance here, and let's bring on our trades, and let's go on to cumulative net profit. So it's around about this period right here. Account was about 10 points away from complete annihilation, and so out of frustration I said I'm just going to go long, and I'm going to hold until we either get target or I get stopped out. Put my stop down here at the open of the candle, slightly below the previous highs there, and decided to just hold. So held the trade. Thought about taking it off at the dart level, decided not to. Had an ultimate target at around 316, and that would have recovered all of the losses and resulted in me being up on the day. After seeing prices head higher, I decided to draw Fibonacci 50% of the way towards that 316 from the dot level of the 73.75 was around about 94. Decided to put a level here at 96, and what the plan was once we get to 96, I was going to trail up to lock in a minus 2k loss for the day if we were to pull back from there. So market came up towards that level, and in reality I should have had my stop down at about 87, but I didn't want to do that. I wanted to trail a bit more aggressively, so because the prices appear to be heading higher strongly here, I decided to move up to 92, where previously I said 92 I'll trail to that level if we break above the this week here around 96.50 or so. Trailed more aggressively, didn't allow it to play itself out, and as prices pulled back a little bit, took me out at that 92, and I was out of the trade. As you can see, prices went on to hit 16, so I would have been done on the day, would have hit our target, and would have been finished on the day pretty early on. So, but before that, prices came in towards a dart level of 0775 here. I went short, and then I realized what is it I'm doing. I'm shorting a market that's so strong, not even closing below the ribbon. So I trailed aggressively, got out for a loss. Now prices came down, pulled back, distortion HL, put in a revolver signal, so went long. Prices came up towards a 316, which was the original trade from down here, which would have taken us out. Prices started to pull back a little bit. I got nervous, not part of the plan, and got out. Again, if I'd have stayed in that trade, I would have been able to reach my daily goals and not having to trade again after. So after seeing that I was making poor decisions, I said, well, I'm going to stick to the plan. The true setup was here. I got the second revolver setup right here. It's higher, it's at above a level that we broke out of, so it was a fairly bad entry in comparison to the entry down here, and so we got in and we placed our stop all the way down below where the original stop was, all the way down here below 300, and we held the trade. And from there, as we can see, we did suffer through a couple of pullbacks, but prices broke out to the upside with volatility. Originally we were going to target 49. No, the level's at 49. We're going to target 48. Wow. Yeah. Wow, incredible. Originally we were going to target 48, but just with the sheer frustration I was dealing with after having to battle back so much, I decided to target 41, which would make us up on the day across the accounts. And even though we had to be aware of a dart level sitting at 38.50, so as prices headed in my favor into profit, trailed below the lows, and eventually my target was hit and I ended up on the day. Now dart level to the upside of the previous period, as we can see, battery's running low here, so I've got to plug in the old laptop. So after that target was hit, I was done for the day. Mentally I was exhausted, and that's where we were. So I keep saying lessons need to be learned, but what I'm going to do is I'm going to reduce size. Came far too close to losing the account, so I'm going to reduce size by about at least 50%. So no longer we're going to be using 5 NQs. Maybe we use, what would that be, like 25 micros, or we go to 2 NQ, but that big drawdown was far too frustrating. Being 10 points from auto liquidation, again far too frustrating. As you can see, we've come through that 49 now, still heading higher. Market showing strength on this daily breakout to all-time highs. Market's up 1.5%. on the day, 272 points from the previous close. So we've seen Nasdaq rally here to the upside, moving beyond its daily range on the ATR, which I have at previous daily range was around 238. Current CDR, current daily range is 328.50 high to low. So we're seeing an outside move of the daily range here, breaking daily range on the ATR. But let's just have a look at the statistics here. This video is going on a lot longer than normal. Okay, so these are the trade statistics. Started off in a hole, got positive. From there, drew down a fair bit, pulled back, and then we drew down to 10 points from the account. It would not have been 10 points, it may have been 8 points from the account being lost, because we were up at least this amount in closed P&L. So we could have possibly been up higher than that. So managed to keep the account, managed to dig ourselves out of the hole, primarily from that frustration revenge trade that we did take. And that frustration revenge trade, which was taken right there. So if that would have pulled back more, would have definitely lost the account. Where's the trade performance now? I'm not sure what I've done with it. That's a bit different. It looks like I'm going to have to get another trade performance. Okay, I'll just get another one. So bear with me a second here. New trade performance. Today. There we are. So here is our trade performance on the day. As you can see, a lot of churning, just like yesterday. Barely positive on the profit factor. Our accuracy was off, but it worked out because we held for longer targets. Average winner being bigger than average loser, again from holding longer here. Average win ratio positive, largest win bigger than our largest loss, again from our holding our positions longer towards further targets. And on the analysis page, what is this? Oh, it's daily. Let's go to trades. There is our cumulative net. As you can see, we drew down all the way to almost losing the account before ending positive. And the half an hour period, which was the least successful for us, let's put it on entry time. We're looking at that 11 to 11:30 Eastern Standard Time period being our least successful. Now, I thought waiting an hour after the news coming out would have certainly would have helped a bit. An hour after the news would certainly have helped a bit, but it didn't in this case. But it's like I said, the majority of the drawdown, I wouldn't say the majority, but a fair bit of the drawdown happened through here, trying to buy these dips at around about 12. So this video is going on longer than normal. Through 12. So if we go back to trades, let's see. So about 11 until 12:15 is where we had the biggest drawdown. 11 till 12:15 was where we had the biggest drawdown. Let's 11 till 12:15. So what we'll do is 11, 12:15. So through this period here we had our biggest drawdown. So we know this trade worked out. This one, continuation lost. Why did we go short there? At this point the video is complete. I'd say thanks for watching. I'm just going to do some analysis on the losses here, just to try and figure out what it is that happened. Let's see, what was it? So let's see. What was it that I was doing here? Did I seriously take a short? Oh, I did. I took a 3CS short right there. Huh. Imagine that. So I went long for the continuation, then I went short here on the 3CS, again countering the trend, and lost. Huh. Imagine that. Eventually went long on that revolver signal, and on the bearish candle there decided to get out for a loss. Interesting. Yeah, I think I was trying to catch a reversal through here. Seems I was trying to catch reversals against a strong market. Trying to catch reversals in a strong market. Interesting. Very interesting. 11:30. What was it here? Oh, this was, I know what this was. That was off that 23, 25. Yeah, there was a dark level through here, and I kept trying to short off that level and losing. Imagine that. And then eventually there was a frustration here after trying to buy these dips into the drawdown. Finally decided to go short, and there was a stop out / closing position before eventually going long off this candle and recovering most of the losses. So started the day saying I wouldn't take any 3CS shorts. I took a couple of them, and then also had some difficulties around the revolver I was using, but there was really no reason. Really no reason for me to take the losses I did, because if I was to follow the plan, like I said when I came in, only using revolver, I would have been looking at only taking longs, possibly a long here. Now that long didn't hit target. That long didn't hit target, which would have been frustrating. But it did go, let's see, it did go 26 points in my favor, so that long there would not have taken this short, revolver short, would have taken the revolver long, I believe, on this candle here for the continuation to the upside. So again, just stick to the plan. It's that simple. Stick to the system, stick to the plan. 3CS does not work in a news catalyst related market or a high VIX market. It does not work because the market trends, it doesn't respect the levels as much. So focusing on the revolver, which is more trend continuation, definitely the best thing. And that's where we are. So you can see where prices are. We've got a dot level here to the upside that we seem to be rejecting off around 58, around this 58 mark or so. But I'm done for the day. After the frustration of all this, I am done. I'm happy I'm green, and going forward I'm going to have to reduce size. And if you've watched the video, thanks for watching. If you like the video, think about liking. Also think about subscribing as well.